Once hailed as a dominant global economy, the United Kingdom now finds itself grappling with economic stagnation. Meanwhile, Ireland, a much smaller neighbor, has emerged as an unexpected success story. With one of the highest GDP per capita levels in the world, Ireland's rapid rise directly contrasts with Britain's post-Brexit struggles. This isn't just about numbers. It's a deeper narrative of economic strategy, global integration, and policy execution. Let's unpack 7 interconnected reasons why Ireland is rising just as the UK stumbles. 1. Shared crisis, diverging recoveries, the 2008 financial crash. Both nations were hit hard by the 2008 global financial meltdown. Ireland experienced a massive recession, but quickly implemented an EU IMF recovery program. By 2015, it returned to robust GDP growth thanks to exports and foreign investment. The UK, on the other hand, endured a slower bounce back. Then came COVID-19 and Brexit, compounding challenges with lower trade efficiency, supply chain issues, and investor hesitation. 2. Growth challenges versus structural problems. Ireland's booming economy brings growing pains, housing shortages, high rents, and congested infrastructure. However, these are the side effects of success, symptoms of a rapidly expanding economy. In contrast, the UK faces more entrenched, systemic problems, underinvestment, a shrinking labor force, public service cuts, and long-term productivity stagnation. These deeper issues hamper its recovery and resilience. 3. Brexit's economic shockwave. The UK's decision to leave the European Union in 2016 triggered lasting economic fallout. The Centre for European Reform estimates a £40 billion annual hit to the UK economy. GDP dropped by 5.5%, and business investment fell 11%. New trade barriers with the EU disrupted half of the UK's trade. Meanwhile, Ireland, as a full EU member, became a relocation hub for companies seeking continued access to the single market, particularly in finance and tech. 4. EU membership, a strategic edge for Ireland. Ireland's deep integration within the European Union has proven to be a cornerstone of its economic success. Businesses based in Dublin enjoy unrestricted access to a market of 300+ million consumers. While the UK wrestles with regulatory divergence and the Northern Ireland Protocol, Ireland offers clarity, continuity, and market access, key drivers for attracting global firms post-Brexit. 5. Foreign direct investment. Ireland soars, UK slips. Ireland is now a magnet for high-value foreign direct investment, FDI, particularly from US tech and life sciences giants. These firms employ a quarter of the Irish private workforce and contribute to 80% of manufacturing output. By comparison, the UK has seen a steady decline in FDI since Brexit, as investor confidence wanes and companies pivot toward EU-friendly hubs like Dublin. 6. Corporate tax policy, Ireland's advantage. A major driver of Ireland's economic boom is its low corporate tax rate of 12.5%, significantly below the UK's. Generous tax planning frameworks mean many companies pay even less, some under 4%. Global firms like Apple, Google, and Pfizer channel vast profits through Ireland, boosting tax revenue and GDP. The EU Tax Observatory estimates around €140 billion in profits are redirected through Ireland annually. These windfalls allow Ireland to fund infrastructure, public services, and a sovereign wealth fund, while the UK faces rising taxes just to maintain basic fiscal balance. 7. Budget surplus versus mounting debt. Ireland reported a 2.9% budget surplus in 2024, largely thanks to corporate tax revenue from just 3 major US firms. This surplus supports public investment, infrastructure, and savings. The UK, by contrast, is mired in debt, dealing with persistent inflation, and forced to raise taxes to offset growing fiscal gaps. Brexit and public sector strain have added to the financial burden. Conclusion: a divergence in destiny. Ireland and the UK started from similar points but are now moving in opposite directions. Ireland's success story is a masterclass in leveraging international cooperation, tax policy, and investment to drive growth. What do you think about this economic divergence? Drop your thoughts in the comments below. If you found this deep dive informative, don't forget to like, share, and subscribe for more stories unpacking global economic shifts. Thanks for watching and see you in the next video.